Hello, fellow traders. 'Tis I, the Rumpled One. Tuesday, July the 3rd, the year 2018. Let's talk trading rules. This is take 3. Having some difficulty. Seems the recorder keeps shutting down. So maybe I'll do that towards the end. But one trading rule that we have is that we always use good, excellent, stellar money and risk management. Okay, the yen, it has fallen out of the monthly wick zone. You see that? It's heading south. Once again, on the weekly, all the gaps filled. You can see here we had a breakout of the previous week's high. We came back into the wick zone. Now we've come out of the wick zone, heading south. On the daily, same thing's true. Broke out of the previous daily session high. Fell through the upper wick zone. Actually touched the lower wick zone. Now we bounce back up. Well, it looks like we're heading south. 5 pips off the daily low. And we've got a handful or plus of pairs with the range over 100, with the yen sitting at a range of 57. Looking at the buy zone, you can see we had the daily pivot below. So fading the pivot paid off once. Here we go. We took a buy zone trade. If you took it right here, there was profit to be made. Hopefully you cashed it in. If you took a short, you hit that's the future pivot. If you took this short, you see it came back, should have scratched it. Right there, another buy zone trade to the north, long, proves profitable. You can see here in the latest short, once again, proved profitable. We touched the weekly open and have bounced off it. So you might want to consider going short at the weekly open. Rat zone, you can see here we pushed down a new low. So for those people that talk about repainting, you can see right here the way this indicator is set up, it's working dynamically. Now, if you come back later, if you actually, I can just show you right here. If you change the chart and then you come back, you can see here, because it's using the current daily low. So you could say, oh, well, that repainted. Well, that's not the way the indicator's set up. Now, I do have a version that would keep those dots where they were, but that's really neither here nor there, because you're always working with what is, not what was. Okay, we can look here. Once again, the pivot was hit. We came down to the monthly open, yesterday's low, and here's the weekly pivot, something that you might be targeting, and the monthly pivot, another pivot you may be targeting. Once again, pivot was taken out. And you can see here, price action. What's it tell me? Oh, 3 ball, red at the line short. Oh, 1 ball, green at the line long. See, 1 ball, green at the line long. Red ball, or 1 ball, red at the line short. 3 ball, we're going to go green at the line long. Simple stuff. And using the lines from the previous daily session, once again using my rule, follow the H1 candle color at the line. Usually it will reward you. Sometimes though, you can see here, if you wait it, because what you want to do, and maybe this isn't clear to some people, some traders, the first time it crosses a line. See, if it crosses this line, then it's going to cross this line, but it's based on the open. So you see here, we had an open. So right there you had a short. You either scratched the trade, or when it came back, the second time, if you wrote it, when it came back down here, and it comes back, you just need to scratch the trade. It's just, obviously, it's just not working out very well. It made a new low, came back above this low right there. Right there, you see? So you just scratched the trade. It got back into that wick zone. Just scratch it. Pick it up the next time. Because you see here, once again, it was a tough one. You wrote it out, came down, down, down. So if you just started a couple hours ago, you see here, already it come down through this line. So you take this line and see what happens. And it rewarded you nicely. And you see we just had a holo zone trade right there live, not Harry hindsight. It dipped into that holo zone and came right back up. I'm sorry, wick zone. Wick zone. Price doesn't like staying in the wick zone. I got ahead of myself. Next one's the holo zone. In fact, right here, you can see we're in a holo situation. And since I turned on the computer, you can see price, the bid crossed above the valley of the ask, and then the ask dropped below the highest, the peak of the bids. So right there, there were some pips to be made if you just want to trade off of the tick price action. Inventory reduction bar, right there, nice short. Right there it hit it, didn't go through it, so that would have been a loss. But one of the things you'd have to wonder, why would you take this trade? It came down here, it's moved 21 plus 11, 32 pips, and now you're going to go long. I think that ship sailed. So sometimes you have to use some common sense. And daily, weekly, monthly, open, high, low. You can see here, there's that open, there's that low. It bounced, but we've got a bear candle heading to the south. Since I turned the computer on, everything is relative. You see it went up. That would have been a scratch or a loss. Here would have made it up. And again, this one looks like a scratch. And we're about ready to do it again. Oh, and just the frequency distribution I was showing from yesterday. And so this was the high minus the close, close minus the low, and you can see what's going on live right now. So trading that rat zone yesterday, it did not close outside of the rat zone, 17. But if you got within a few pips of that high, you still could have taken 5 or 10 pips out of a rat zone trade. So let's see if I can get these rules to come up. Oh, no. Okay, I think I got the rules to come up. Dennis Gartman's 22 rules. Don't add to a losing position. Okay. Trade on the winning side. That makes sense. Capital comes in two varieties, mental and your money. And so you don't want to hold on to losing positions because that drains your mental capital. Says you don't try to buy low and sell high, buy high and sell higher. Sometimes you do, sometimes you don't. Bull markets, he says, to be long or neutral, bear market, short or neutral. Basically, it just means go with the flow, I think. Markets can remain illogical longer than you or I can remain solvent. Yeah, that's true. Sell markets that show the greatest weakness and buy those that show the greatest strength. Those people using the strength indicators, that's what they're doing. Try to trade the first day of a gap. Well, in Forex, that would be on that Sunday, Monday trade, and we do that. Trading runs in cycles, some good, most bad. I would disagree. Trading's what you do, not what the market does. So long as you are sticking to your plan, following your rules, doing everything according to plan, you're not going to you're going to rate your trading on how you do the process, not the results that it produces. To trade successfully, think like a fundamentalist, trade like a technician. To understand the markets. No, I think you just have to be able to react to what the market's doing. Respect outside reversals for after extended bull or bear runs. Well, maybe. It says keep your technical system simple. Oh, yes. Yes, yes, yes. Respect and embrace the very normal 50 to 62% retracements. He's talking fibs. If a trade is missed, wait patiently for the market to retrace. Yep, don't go tracing the trade. Yes, retracements happen. I agree. Understanding of mass psychology, more important than understanding of economics. Just look at the chart. You don't have to worry about all that other stuff. It's all in the chart, right? Establish initial positions on strength and bull and on weakness and bear. Well, yes. I mean, that's self-evident, right? Bear markets are more violent than bull markets. And so also are there retracements. Okay, I guess that could be proved statistically with frequency distributions. Be patient with winning trades. Be enormously impatient with losing trades. Once again, just stick with your plan. Don't airball it. Don't, seat of the pants it. Market is the sum total of the wisdom and the ignorance of all those who deal in it. Yeah. Don't argue with the market's wisdom. Okay. Do more of that which is working and less of that which is not. New highs are to be bought, new lows are to be sold. Except when you're that last person, right? The hard trade is the right trade. If it's easy to sell, don't. If it's easy to buy, don't. I'm not sure how you can put that in trading when all we have to do is click a mouse. There is never one cockroach. This is the new winning rule submitted by a friend. Never one cockroach. And all rules are meant to be broken. The trick is knowing when and how, and frequently this rule may be invoked. I would have to agree with that. So, that being said, know your rules. Don't break your rules. Stick with your plan, follow your plan, execute your plan. Because it's not what you trade, it's how you trade it. This is the Rumpled One. I'm going to go drain the banks.